Hey guys, this is a market update. A massively pivotal time right now for Bitcoin and crypto. We're going to go through this report by ARK Invest, which is showing us how this is affecting Bitcoin and therefore crypto after that. And this, which is what the market expects the Fed is doing with interest rates. This is vitally important because of the way the market reacts after the very last Fed hike, which could have already happened. And so let's go through this in this video. Firstly, let's get to Bitcoin and how it's reacting. A warning right now, over the next month, there may be a lot of volatility and FUD. This week, we have the latest Bitcoin ETF application coming, which is the ARK 21 shares Bitcoin ETF refiling from ARK. They refiled that because of the way that BlackRock came in with their surveillance sharing agreement with Coinbase. Everyone has refiled to include that wording, this surveillance sharing, which potentially is the turning point for actually the SEC accepting these Bitcoin ETFs. But we don't know. I personally believe that the SEC is not going to do anything until their court case with Grayscale has been decided on, and that may not come until a few months' time. Many people are saying potentially October for that. So the deadline here on the 13th of August, I believe this will be delayed and pushed back. So if there's any FUD around this, just be aware of that. Also, you can see the first deadline for most of these ETFs that were all filed around the same time is around the 1st or 2nd of September. Just keep that in mind. I believe that these will all be pushed back until that court case with Grayscale is decided upon. And so just be aware of, FUD mongering and anything like that that may happen. Again, Bitcoin is just coming back into this uptrend channel and has not broken through it yet. I would be looking for breakdowns here and a lot of weakness and FUD around those Bitcoin ETFs to potentially take speculative longs. I'm dollar cost averaging now anyway, without too much care about the price. Believe we have started a new bull market and we're in that accumulation phase. As you can see here, a lot of strength in the Bitcoin price. But let's get into the monthly from ARK Invest, because it's a very important report going on. If you are a trader, check out your deposit bonus to Bybit up to $30,000. Link in description for that. You can check the details, make a deposit and trade. You get that deposit bonus. Most of the on-chain data and fundamentals ARK Invest are looking at show very positive signs for Bitcoin demand. And so as the demand side strengthens, we know that the supply side is actually going to get cut in around 8 months' time. So that is obviously the lead up to Bitcoin halving in that narrative there. So let's have a look at how this is shaping up. I've actually gone through this in the recent crypto course update as well. If you have the crypto course, just check these new videos. These have been updated already. These are completely free for you guys. You can see all of these update videos here on the Bitcoin halving, my investment strategy for that, and then some altcoins and the Ethereum layer 2 landscape as well, which is really growing right now. So if you have the crypto course already, those are updated already. If you don't have the crypto course, check it out. I'll link it in the description. Updates come for free, and I just updated it yesterday with that new research. So what we can see here is that volatility in Bitcoin, they say, is at a 6-year low, which is obviously incredible. This shows to me that we are in a demand-supply balance right now, and so demand and supply balancing each other out. And so that's very different to a bear market or a bull market. But of course, you need this consolidation before a big move. What's happening now is investors are taking their place, right? They're making their bets. And so with a lot of FUD, not really moving down, we're not really moving up either. We haven't got that good news. We haven't got the turn in the market, but investors are making their bets for that turn. So what they're seeing here is that a healthy equilibrium between short and long-term holders suggests strong fundamentals paving the way potentially for a sustained uptrend in the Bitcoin price. It would seem like that if we compare it to previous cycles, but the macro is still very, very uncertain and could lead us to a lot of volatility, both up and down. So we'll look at that. China is exporting deflation to its trading partners, including the United States. It's actually very, very good news. If inflation expectations continue to drop, the market can just ease off a little bit with its volatility because, very uncertain. Regulatory uncertainty given to Bitcoin. I don't agree with this. I don't think Bitcoin has any regulatory uncertainty whatsoever. It's very, very certain what it is. No one's against it. It's being brought into the TradFi markets as well. I don't think there's any uncertainty. Let's look at some fundamentals here. Market cost basis, $20,000. Short term, you're looking at around $28,000. You should see this as a potential support level in terms of the price during any FUD. If we break through that, you may see some more capitulation down from short-term traders who don't want to be making losses and have stop losses. So see that as a fairly decent support level for short-term trade, but just be aware of it. If we do break through that, there might be some more FUD. However, I think the longer term trend is for upside move in BTC. If you have a dollar cost averaged price of Bitcoin below 20,000, you are beating the rest of the market on average. Bitcoin is a growing network and its price is in a general uptrend. We can see this via the 200-week moving average, which is this purple line right here. The 200-week moving average, as you can see in purple, just points upwards. And so that is obviously a clear uptrend. The network is growing as well. When the price comes down to the 200-week moving average, like here, it's usually a time when the price is comparatively weak or comparatively low in comparison to its larger uptrend. Bitcoin spends most of its time above the 200-week moving average. During this bear market, we have seen one of the most significant drawdowns in the Bitcoin price. So the price was low and for longer than usual bear markets. Now that makes sense because we had one of the biggest rate hike cycles ever. Is that coming to an end now? Bitcoin is starting to price it in. Remember that the network is just fundamentally growing over time. And so you have that fundamental growth that has to be priced in, plus any fiat currency nonsense and chicanery, money printing, which obviously sends it much higher as well, but can also send it way lower during these cycles. In any case, what I'm seeing here is just the end of a bear market and the return to some sort of normality in Bitcoin pricing structure. What we don't know is if the Fed is going to continue raising interest rates or whether they are finished right now. They are going to lead us to believe that everything is still on the table. The next meeting is in September, and so they have a long window to keep the market guessing until more employment data and inflation data comes out. According to Vanguard, though, they believe the Fed is done right here. You can see June, July, they expected a hike, which did happen, but now we're done according to Vanguard, and there will be a pause and interest rates to stay the same until a potential cut in the middle of next year, June 2024. You can see the probability of a rate cut is actually increasing with their data towards the end of this year in December 2023. Why are they saying this? Well, we can see the data from all of the previous rate cut cycles or rate hiking cycles as well. Also, we can see here is that interest rate cycles have a lag. There is a potential 12 to 18 month lag in the way that interest rate hikes affect the economy. This is bearish in ARK's view because as of right now, the market is trading on a potential interest rate of around 1%. Why is that? Well, during zero interest rates back during the pandemic, everyone refinanced their debt on 3, 4, 5 years, whatever it is, at zero. And so actually a lot of these interest rate hikes may not be affecting a lot of the companies or people that remortgaged everything at those low rates. And it's only when people start to have to reload that debt again at the higher rates that it really hits. And so there could be a 9 to 18 months period right here that can really damage the economy significantly. And that's actually not good for stocks or Bitcoin. We want a slowdown, but not a crash. But let's have a look at the data. This is Putnam right here, and they have looked at data from all of the previous rate hikes since the 1980s. The average time between the last Fed rate hike and the first rate cut is 5.5 months. The minimum time was 1 month and the maximum time was 15 months. Returns across major US equity indexes were positive on average in both the 6 months and 12 months after the last rate hike. Have we actually seen the last rate hike either now or in September? We are very, very close to it. And so even with this potential for a lot of volatility, where we don't know the economic data is coming out, usually equity indices do quite well, and Bitcoin is going to have a lot of correlation to them. But it is not all smooth sailing. You can see a lot of volatility here. S&P has drawdowns of potentially 13%, And that would mean Bitcoin looking at a drawdown of 20 to 30%. That happens normally, but it's still within a potential bull cycle. And so that's what I'm looking for. And that's what a lot of people are starting to trade now, which is getting into BTC before that, making their bets, which is why you've seen the price rise from 15 to almost 30K this year, as long-term investors and speculators are taking positions now in order for those price differentials that are coming in 12 to 18 months time. So please be aware of any potential FUD storms around the ETF applications. I believe they will be delayed and pushed back at least towards the end of this year. It is the ETF applications being accepted that will break us through the 32 resistance, in my opinion. If not, we may just be in a consolidation purgatory until some other piece of positive or negative news happens. If you are a trader though, check out the 30K deposit bonus on Bybit. If you are part of the crypto investor course, go and watch those new videos uploaded yesterday. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.